Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing my European opening market comment for Wednesday, September 7th. The dollar is a lot lower this morning after yesterday's shockingly weak U.S. non-manufacturing ISM index. The combined manufacturing and non-manufacturing index fell the most since 2008 and is now back to where it was in 2010. As a result, the odds of a rate hike by the Fed fell sharply, particularly the odds for September. That dragged the dollar down. Meanwhile, the euro and the yen benefited not only from the weaker dollar, but also from fading expectations that those central banks would do anything when they meet, the ECB tomorrow and the Bank of Japan on September 21st. As for today's indicators, the European day once again got off to an early start with an indicator from Germany. Industrial production unexpectedly fell in contrast to the expected small rise. It doesn't seem to have affected the euro much, however. Now today we have a lot of things coming out that are indicators that will affect the pound. The Halifax index of UK house prices is forecast to show a small month-on-month drop in August. Later in the day, the RICS house price balance index also comes out. That's also expected to show some deterioration in the housing market. So a downturn in the UK housing market could be negative for sterling. But even more important than house prices will be the UK industrial production data for July. That's part of the GDP calculation. It appears that the plunge in sterling after the Brexit referendum has helped British manufacturing. So the market's forecasting that output accelerated on a year-on-year basis. I would think that could add to the feeling that the UK economy has weathered the immediate post-referendum period better than expected, and so could prove beneficial for sterling. However, the impact of the housing and the industrial production data could be overwhelmed by the appearance of several Bank of England officials at the Parliamentary Treasury Committee today, including Governor Carney. Now, when the bank lowered rates on August 4th, they said that their package of measures, quote, contains a number of mutually reinforcing elements, all of which have scope for further action. So the officials are sure to be grilled today on whether they think further action is likely. Now, Governor Carney may emphasize that the longer-term risks to the UK economy are still there, since Brexit actually hasn't happened yet, and the UK is still in the EU. Now, that view could be negative for the pound. On the other hand, two of the other people testifying today voted against part of the package of measures, so they may even suggest that the existing measures could be reversed, and that would be bullish for sterling. So a lot of news coming out today about the pound. For an update on the U.S. indicators coming out today and the Bank of Canada meeting, please watch my North American opening market comment. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.